All right, let's get into what's happening in the marketplace at the moment. Let's quickly have a look at Sydney. So 0.2% growth in the last month, 0.1 for the quarter. We've got 11% growth. So Sydney's still showing 11% growth annually, or the past 12 months. So that's very strong. But it is definitely sharpening. Melbourne, major city, one of the major cities, the only major city to show a negative growth rate, albeit minor, minus 0.1, and quite significant negative 0.9. So nearly 1% downturn over the quarter. So they're definitely in a downturn trajectory, albeit like more of a plateau than anything else. They're only showing a 3.9% growth, which for Melbourne, of course, is low compared to what's been happening in the last 2 years. That's interesting, but Sydney's still holding its own. Brisbane, 1% growth, 3.2 for the quarter, 14 for the 12 months. So you've got Brisbane, Adelaide, Perth, which are definitely in a different, in a different channel. You've got a dual sort of, pathway, and Perth, Adelaide, and Brisbane. Brisbane 14% growth, Adelaide with 10.3, and Perth with 16.7% growth. That's the biggest we have seen. Oh, gee. I wonder if we saw that in 214 with the 212, 213. I don't think so. So I reckon that's probably the biggest growth that we have had as a state since 2007. Can anyone correct me on that? No, I think that's the biggest jump we've had, which is insane. It's great. Can't complain. We've had 4.9 for the quarter, 1.6 for the month. So really, really buoyant market in Perth, as we all know, because 75% of our members are from Perth. Combined capital cities showing a 0.4 growth, a 1% for the quarter, and a modest 10% for the year. Definitely also on the downward sort of trend. Combined regionals, 0.4 for the month, 1.2 for the quarter, and 4.9 annually for regionals. And obviously that's also, definitely a downward trajectory. Nationally, 0.4, 1%, and 8.7. So same as combined capital city, just it's an 8.7. So you're going to get people saying, oh, well, there's been 8.7% growth, our Eastern States members. You can say, yeah, but most of that is made up of the smaller cities being Brisbane, Adelaide, and Perth. Perth people, what you could be using, of course, with these figures is, yes, we're buoyant, and yes, we are seeing higher peaks than we have for a decade plus. But I want to remind you that Melbourne and Sydney showed these growths 12 months ago, and they were steady for at least 12 months. So it's not that out of character that Perth is now showing those growths that we probably should have showed a year or so ago, because we're just so far behind. As we all know, the Eastern States is flooding our market to buy because it's great return on investment, but also because they see great growth in the Perth or West Australian market. So look, it's all very, very good, and I can't really complain or give you too much negativity about that. But let's have a look at what CoreLogic say, and our friend at CoreLogic. So Australia housing upswing continued through first month of 2024, with CoreLogic national home values rising 0.4 in January, up from 0.3% in November. Beneath the headline, resulting housing market performance remains diverse around the country, which I've already said. Three capital recorded a subtle decline: Melbourne, Hobart, and Canberra. Identifying Perth as a standout amongst the capital cities for a persistently rapid rate of capital gains. Perth home values rose a further 16.6% 1.6%, on par with the city growth trend in November and December, and this slightly lowering than a recent high of 1.8% recorded in October. The Western capital continues to see housing demand overweigh supply, helping to push values 16.7 higher over the past 12 months. Despite that, housing prices remain relatively affordable compared to the most other capital cities, with the median dwelling sitting at 677, which has increased for us quite considerably over the last 12 months. Regional markets are now showing us a stronger trend in value growth relative to the capital cities. Despite worsening housing affordability, the volume of home sales has held slightly above average over the past 3 months. Let's look at the rental quickly. The pace of the rental value growth lifted in January as leasing markets entered a seasonal stronger first quarter of the year. The National Rental Index recorded the strongest monthly rise since April, with rents up 0.8% in January, following a 0.6% rise in December. Similar to housing values, Perth and regional WA led the pace of rental growth over the rolling quarter, with Perth unit rents topping the list with 3.7 rise over the first 3 months ending January. Regional WA house rents were up 3.6. While the unit sector has recorded a stronger rental growth compared with home rents through the recent cycle, this trend appears to be changing, with houses rents recording a higher rise than units across most cities over the past 3 months. Gross rental yields have firmed across most regions, stabilizing slightly below the long-run average. Let's have a look at a snapshot. The housing market has started the year on a similar footage to where it left off in 2023, with values generally trending higher, albeit with significant diversity across regions. Inflation has been moderate since moving through annual peak at the end of 2022 of 7.8, falling to 4.1 in December. The crash rate looks to have peaked at 4.3, well above the pre-COVID decade average of 2.55. This is interesting. Credit policy and macro prudential settings could be a key determination of housing outcomes for 2024. One of the biggest hurdles in the way of a material lift in home purchasing demand is the 3% point buffer applied to borrowers' home loan serviceability assessments. So obviously that is when you're getting a loan, they put 3% on top to allow for any increases in the mortgage rates, all right? Which is causing a bit of a problem because we've had some rises, and it's taking the the buffer and the rate up to about 8% for some people, which is unaffordable. So the APRA adjusted, potentially we could see the APRA adjust the buffer back to previous setting of 2.5 prior to all the rises. However, there is no guarantee this will be the case. Consumer sentiment, with the monthly measure from Westpac and Melbourne Institute lower again in January, high cost of living pressures and high interest rates have been influential in keeping sentiment recessionary low. So basically, consumer sentiment is not high because we've got a dual market. East Coast are feeling the pinch. As a result, stock levels are rising, and they're not getting as quick as sales. Perth is still right smack bang in the middle of their boom. So all we're doing is making sure that they don't get any sort of interest cuts. So we're sort of looking after each other if you look through the look between the lines. Okay, migration. This is interesting. Migration patterns are clearly changing. With a peak in overseas migration last year, normalization in regional migration trends, and an easing in some of the more extreme interstate movements, less overseas migration should help to ease rental demand, especially in the larger capitals, where a higher portion of overseas migrants have settled historically. From a purchasing perspective, there is a lag in historic buying activity from permanent migrants, suggesting we are likely to see a recent peak levels of migration flow through to purchasing activity over the coming years. That was news to me, with migration slowing down. Now, we know that there was mass migration put on hold over COVID, and then we had obviously a backlog. It seems to me that backlog has now come and gone, and that's been driving all markets. We may still get high migration in Perth because it's been a slower transition, migrants and immigrants moving to Perth. So we're probably still enjoying a lot of that, but there has certainly been a notifiable decrease in migrants. So there's another little thing that we just need to consider for our future property market. New Zealand, very quickly, CoreLogic prices rose, fourth month in a row. So that's great for them. They had some shocking downturn. Both November and December, 0.7% and 1% respectively. Since September trough, through property values have now risen 2.5%, bringing the national average to $928,000 for an average property in New Zealand. Wellington, Hamilton recorded mild growth, 0.1%, 0.2%. The mood in the housing market has certainly turned since the middle of last year, given a flip by the change of government and its property policies, friendlier investors. The mindset shift is reinforcing the effect underlying fundamental drives, but it's certainly not, like booming. It's certainly just showing a trend upwards. Auckland 2.1 lift and Wellington 0.5. So that's the New Zealand market. And who wants to throw their two bobs worth in with regards to what they're seeing in their market and whether that market's accurate and how they see the rest of the 2024 market? I believe there's some chat. Let's have a look at chat. Don't you think Perth being so far behind other states is just playing catch up? Absolutely. Definitely is. But for how long, Jill? That's the question. How long will that continue for? Logic tells us that cycles in real estate are 3 to 6 months. So if it's really good at the moment, you're probably likely to continue to see that for 3 to 6 months. Once the cycle changes, then you've got a change over the next 3 to 6 months. So I think we're going to be okay this year, personally. But hey, I've seen it fall off the cliff before, so be mindful of that. Do you think with the minerals on the way down, it may affect us in general later on with people losing their jobs? Look, there is always mines and businesses. There was a big business closed not so long ago. What was it called, Anita? Your brother-in-law worked there. Alcoa. There was 2,000, 3,000, I think, employees, and that's just down here in Rockingham that closed. So look, we're going to get that, but everyone I talk to, I don't read a lot of the mining magazines. I'm just focused on real estate, but I do sort of cross over a little bit. But as far as I know, Jill, unless you can tell me something different, resources are going well. I don't know of the resource sector slowing down, or hey, Helen, can you talk in this space for us, please? Because Helen's commercial and she's in Port Hedland, so we got Helen right on the pulse. Give us a report on what resources and minerals are doing.
Well, it was originally up here would have all been iron ore, and when it's crashed and taken off each time, it was mainly iron ore that fueled the industry. But now we've got renewable energies, lithium, gas, green steel. There's a load of projects, hydrogen. They're talking about everything. It's probably been talked about most of last year, but it hasn't really taken off yet. There's just been a few companies have pulled out with lithium. Newcrest, I think, have just stopped working in Element 25 last weekend, just said that they're going to pull out of the market for 12 months as well. So it's hard to know what's going to happen. We say if half the projects happen that are due to happen in the next 12 months, that should be okay. But it's just a lot of talk. We're okay because we've a port and we've got iron ore and they're expanding the port. But what we were hoping was that there would be a diversity of minerals that would kind of keep the place going. So it's picked up. Last year was a bit quiet at the start of the year, and then the end of the year picked up probably June to November. And then December and January were a small bit quiet again, but we've just seen February has just gone crazy again. We're all the companies planning to come up to the area. So yeah, we just hope 2024 will take off the way it's meant to be. But we probably thought it was going to happen in the middle of 23, and it was pretty quiet for a while. Yeah, we just have to wait and see. It can be different announcements. It can just change. Just as we all wake up to the news the same as yourselves, and no one can forecast it. So yeah. Yeah, a lot going on and a lot of talk. And as I said, if half of it happens in the next 5 to 10 years, it will be amazing.
Beautiful. Thanks, Helen. Round of applause for Helen, folks. Good on you. All right, let's kick on, because that's my half an hour spiel gone there. So, but I think it's all very positive. East Coast is a little different, but they still are making sales, albeit at a lower frenetic, at a lower pace. But all things going well. I mean, Perth property market, only 3,956 properties, and that's units, land, and houses. So 1,800 properties for rent in Perth. I mean, that's sickly low. But it's turning. You know what I mean? It's turning, and it's good. So you know, we've just got to keep our heads above the water, and you know, obviously a low listing rate for real estate agents can be catastrophic. I know some agents that have got lots of stock. We've got Peter Robertson, who's carrying over 30. We've got you know, Richard Self, who will be joining us. He's got, you know, similar. And then I've got people who've got nothing, zilch, nada, no stock whatsoever. So it is diverse. And it all depends on you, your demographic, and your structures, resources, and of course pipeline. So we've got a few more there. So let's have a look. Perth economy now is in a one-horse economy of commodities, so we are vulnerable because they stop quickly and slow to ramp back up. Look, I agree. Perth is a micro market, and I've always said this. Meaning, we're not a New York or a Sydney or a you know one of these massive cities and massive states and territories. I mean, we carry at the best time 15,000 listings. It's not rocket science to realize that we can be affected by a little blimp on the radar. So it doesn't take like a GFC for us to, you know, sort of have a different market. It can be, you know, subtle things because we're a micro market. But look, I think, you know, we can only deal with what's on the table, but the horizon definitely is you know, be that next year that stocks will increase, prices and increases will slow. So we've just got to keep our heads down and prepare, enjoy the market that we've got. If you've got stock, if you haven't, well, there's your focus. If you do, and then just be mindful that, you know, gear yourself up for a market which is gonna slow. There's no doubt about it. It's just when.